All right, let's stay on the theme of what could make a high a high. A lot of people struggle knowing when to get out, or when not to reach. If you didn't get long for this breakout, and there was a clue that we were going to break out at this time, I'll show that in a second. But after it breaks out, where's a clue to say this might be enough? Well, first, if you get an explosion of longs that come in, so you can see this pop. We've got more shorts that are stuck than long, and then all of a sudden you see that switch as these longs come in, and it switches right there, goes from red to green, and all these longs come in, and it's just the moment you have to say this could be the top, and there's a high probability that it is the top. And if it's not the top, it usually kicks it sideways for a little while, but this ends up being the top. And I'm explaining that with this pen back in real time, but it's just like you can't take your eye off the ball. The laser went red to green. That means there's more longs being stuck, and then more longs come in, and then they just come off. So then, what's signaling a breakout? First of all, if you don't see this congestion box, then you have to start seeing it. We're either going to break down through there or break up through there. All right. So if you're positioning for the breakout to the upside, it's all about timing. You want to keep an eye on the NASDAQ. You want to keep an eye down here on the Russell. And so what do you want to see for a move up? You want to see shorts get stuck. You want to see shorts saying, wow, look at the top of this range. Must be good resistance. I'm going to be short here. And at some point you get too many shorts leads to too many buyers, and that creates the dynamic of a breakout, in this case to the upside. So if I just fast forward it in here, you can look at it in more detail down in here, but you see it happened right in here. We back it up. Right in here, we seen this market go from green to red and what we call the laser, this line here. These longs shrink up and some shorts come in. Right there, shorts come in right there. Laser went red, some greens backed off, more shorts, and it's just, this is the moment. If we could stay above this line, we could take out the top up here. And so we just go back, fast forward it. Some greens come in, which rotates us, but still got to respect the top of that line. And then wham, some more shorts come in, the upside's right side. Then you take a look at our cousins. You got the NASDAQ over here that could break out through 86. And you've got 90 that could be broken. I call the last two numbers in the Russell, drop the decimal. These 90s were important because it held right there and held right there. And then wham, you're going to get a little jump most likely there. So you had three markets. One, the ES breaking out through the top there. Two, the NASDAQ breaking out through the top there. And three, the Russell potentially breaking out through the top there. And so if I play it, you see the pop here in the Russell. You see the pop there, and you see the pop here in the NASDAQ. All predictable. It's not raining, and then you say it's going to rain. It's not, well, I felt a couple drops. I think it's going to rain. It's, you kind of look out in the distance and you got a little predictive skills to say the order flow with stuck longs versus stuck shorts is changing, creating some upside probability. The relationships between other stock indexes have a spot to break out to the upside. 3 is better than 1. And then we even tag it on our OPP chart with these correlation lines where you could see them all go up together. Watch these two lines, this line here and this line here, which both represent the NASDAQ and the Russell. Watch this where you want all three of them to head up, and they do. So you get the laser to change and you get all three of them to point up. And when they all point up at the same time, it gives you more bang for your buck that the upside has some follow through. So a lot of things to conflate on this highlight. It's the correlation relationship between other markets that certainly play a role into the market you're trading if it's the ES you're trading. And then it's stuck longs versus stuck shorts. If you're learning anything else, go become carpenter.